Indeed, I think they always want more if you give them something else itself. But it's good for me as a macro analyst looking at the Fed performance in terms of that. Data so far, somewhat mixed. There is pressure on the economy, but generally, there is still a fairly decent economy in terms of slower growth, but still seeing gainfully, a tight labor market, etc. as well. So it's I think, correct response rather than being panicked by markets into overreacting just because the market feel like it in that sense. So I think there's probably still room for disappointment, but we'll see. I think the upcoming string of data, starting from ISM jobs report all the way through, will determine, I think, the debate on whether there will be more cuts or in 6 weeks' time, or whether they'll be waiting for the next one in December, I think will continue to persist over the coming days itself.
We did learn that there were some dissenters when it came to the outcome.
Indeed.
Does that mean that policy settings are going to be a little bit more tricky going forward, because it wasn't clearly unanimous? All of the Fed voting members didn't want this rate cut. What's your expectation on where we go, or is it really data dependent, as you were outlining?
I would say data dependent very much. It clearly two camps in that side. Those that think we should be a lot more proactive. Certainly, many of the central banks around the region here have already done that because they already saw their own data coming through as weakening trend, new export orders coming down itself. US side, again, somewhat mixed, still generally some supportive element of the economy itself. So this is where, again, is very much data dependent until such point as weight of evidence, so to say, going to put pressure on the US labor market, price inflation and wage growth, etc., then they can be a bit more aggressive. I think they can be a bit more selective primarily because they have less to cut this time around. Far, far less buffer than 10 years ago.
Absolutely. Dan has a question for you.
Hi, Dan.
Hi, Seng Wun. How are you? There was a lot of political pressure on Jay Powell to cut interest rates here, but as Matt just explained, the reaction from the president wasn't necessarily that good. He said that Jay Powell had let him down. Do you think that his position is safe, and how much of an awkward position does that put the Fed in moving forward?
Perhaps that's why I think Jay Powell was somewhat nervous and fairly agitated. I think last night itself. But I think much really will depend on his stance itself. He cannot be replaced, obviously, anytime soon. So I think he will ride it through. Ultimately, obviously, from President Trump as the politician, he certainly won more rocket fuel being added to the economy at this juncture to continue to keep the fire burning as he looked for re-election as well. But I think he'll be able to stand his ground.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.